Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there on Wall Street, make it understandable to you on Main Street. The downward trend did continue last week, down 2.5% for the week, 4% for the year. But on Friday, at the beginning of the trading day, it was down 4.5%. Let's do some math. Up 2% in that one day alone. Those people that try to take their ball and go home and buy a CD on Thursday, now what? Well, did that downward trend continue? Would fundamentals and fundamental investing come back in play? Here's your week in review. We'll get right to it. As of this print, the market is up marginally, and we will take it. And I want you to notice something during the week. The headlines weren't tariffs this and this that. Negotiations going on behind the scenes. Thank goodness. But a lot of data came out this week that pertains to you out there, the consumer. Consumer spending, retail sales below expectations. Is that a surprise to anyone out there? When you fear that you're not going to have a job next week, you're not going to spend on that ancillary items, right? Well, the Fed understands that. And on Wednesday, the Fed came out and said this: we anticipate lowering interest rates at least twice this year. We are here for you. And I mentioned on last week's blog that there's what's called a Fed put and a presidential Trump put. What does that mean? Once they see that the economy is slowing down too much, or it comes to the president, the market is going down too much, they will do something. Tariffs will be negotiated. And again, the Fed will cut interest rates, which is better for you and your balances where it comes to your credit cards and where it comes to your home equity lines. And lastly, today, we heard from corporations. And be prepared for this line. We don't know. We can't anticipate what our costs are going to be due to the uncertainty of the tariffs. Folks, fundamental investing balance sheets are still strong. The labor market is still strong. And I believe that you out there in the retail world will also be strong where it comes to spending once this tariff, I almost said a bad word, stuff goes away. And here's what to look for next week. Sadly, I believe the negotiations will start becoming more public. Why? Because if there is not a deal done by April Fool's Day, ironic, right? Reciprocal tariffs will go into place. So again, be prepared for the volatility. Right now, we're in the eye of the storm. It is calm. Over the next 2 weeks, sadly, volatility will increase, which for long-term investors, in my opinion, creates a great buying opportunity. And I'll leave you with this. Last week, the number of outflows, the number of people out there in retail land selling stock was at a record level. 401k trading at a 4.5-year high. You out there on Main Street are selling stock. And avid viewers of this blog know this, that we anticipate being into the Main Street theory where it comes to investing. When everybody in Main Street wants to do something, we at the Flagship will do the opposite. Consult your local financial advisor for more details. Here's your personal finance tip of the week. Let's save you some money. Let's keep money in your pocket and less at the U.S. Treasury. How do we do it? It is not too late to contribute to an IRA account, a SEP IRA account. Putting money away for yourself and getting a tax deduction makes sense to this financial advisor. So thanks again for checking in. We'll see you next week on the Captain's Blog.